Welcome in this video where ZBCN coin can go up 50% if it breaks. We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand. When looking at the chart from a broader perspective, namely a higher time frame, we see a clearly defined and long-standing descending trend line that has remained intact for an extended period. This downtrend clearly illustrates how dominant the selling pressure has been in the market over the long term. In particular, this trend line has acted as a resistance zone that the price has touched multiple times in the past and reacted downward from, making it a level closely monitored by investors. A trend line this strong and repeatedly tested is considered a major trend in technical analysis, as market participants often view it as a critical breakout point. Currently, the price has once again risen to this descending trend line. However, since it has yet to break through this area, the upward movement has remained limited. This indicates that sellers are still active here and that the resistance level is holding. On the other hand, the fact that the price is retesting this area may also suggest that buyers are starting to gather strength. In technical analysis, the more a level is tested, the more likely it becomes to weaken and eventually break. If buying pressure continues in the coming sessions and the price manages to break above this long-term descending trend line, it would be interpreted as a highly positive breakout on the chart. When such major structures are broken, it is often accompanied by strong volume and sharp upward moves. Additionally, breaking psychological resistance levels may encourage many investors to re-enter the market, further accelerating the upward trend. In conclusion, the price is currently resting against a major descending trend line. If selling pressure reappears at this level, we may see a pullback. However, if this key trend line is broken with volume and conviction, the path could open for the price to move significantly higher from a technical standpoint. Therefore, let's take a look at other metrics so the analysis can be more conclusive. Keep watching. According to the Elliott wave theory, the third wave is typically considered the strongest and longest wave. This develops as most investors begin to follow the movement, and momentum increases. The second wave is generally referred to as a correction, during which market participants experience a certain level of emotional uncertainty. However, at the beginning of the third wave, more investors get involved in the market, causing the price to move upward more quickly. Therefore, the size and strength of the third wave reflect a period of increased confidence among market participants and new buying activity. In this context, the Fibonacci levels of 1,618 and 2,272, which are the minimum targets for the third wave, are crucial levels for investors to forecast price movements. Fibonacci retracement and extension levels are commonly used by investors and analysts to determine potential limits for market movements. The 1,618 and 2,272 levels are key points in these analyses, and the type of reaction the price will have at these levels, once the market reaches them, is an important question. Reaching these levels often triggers more buying activity because investors see them as natural resistance or support levels. Additionally, technical analysts and algorithms generate buy and sell signals when these levels are reached, which can increase market volatility. At these levels, there could be significant battles between buyers and sellers, as there will be differing views on whether the price will continue to rise. As the price reaches these Fibonacci levels, investors expect further upward movement if the level is broken. However, as always, markets can behave unexpectedly, and corrections might occur before the expected levels are reached. Especially with large movements like this, investors might become overly optimistic, and we could see some correction or consolidation in the market. This could be interpreted as a pullback period that tests the strength of the third wave. Furthermore, the achievement of large targets for the third wave is not solely linked to the strength of price movements, but also to the psychological state of market participants. As the price begins to rise, more investors notice this movement and become eager to participate. However, when the price reaches certain levels, more cautious investors may start selling, which can lead to price consolidation or short-term corrections. These corrections typically test the sustainability of the upward move. Finally, as suggested by Elliott wave theory, while the third wave is always the strongest wave, the market movements that develop during this wave may sometimes show shorter corrections or sideways movements. Such situations require investors to develop the right strategies in the market. In particular, before the third wave ends, investors should remain patient and trade with the natural fluctuations of the market in mind. Therefore, reaching the 1,618 and 2,272 levels may indicate the continuation of a major upward move, but at this point, careful monitoring and proper risk management strategies are required. Investors should continually review the evolving market conditions as the price approaches these levels and adjust their positions accordingly. The MACD indicator is currently at a critical point and should be monitored closely. In particular, the upward trajectory of the indicator's lines suggests a potential trend reversal or a strengthening of the existing trend, which could be a significant signal for the markets. The increasing distance between the MACD line and the signal line indicates that upward momentum is accelerating and buying pressure is intensifying. This type of setup is often seen during periods when investor confidence is growing and optimism is becoming dominant in the market. The MACD positioning above the zero level signals that the upward movement is built on a stronger technical foundation. A MACD value above zero means that both the short and long-term moving averages are trending upward in relation to each other, reflecting an overall bullish trend in prices. As the MACD line continues to move upward in this positive territory, it can lead to an increase in long positions, especially if this rise occurs while approaching a previously tested resistance area. A breakout at that level could trigger significant acceleration. Moreover, the histogram bars are clearly reflecting the strength of this upward momentum. As the bars grow, it indicates an increasing difference between the lines and a clearer trend. This also suggests that the market is embracing the rally and more investors are entering positions. This kind of MACD setup is very positive from a technical perspective and often points to the market preparing to break a significant resistance level or initiate a new trend. If the MACD manages to maintain this structure, an acceleration in upward price movements can be expected in the coming days, especially in cases where prices have been consolidating in a tight and directionless range. Such a strong signal from the MACD may lead to a breakout. Historical data shows many examples where such MACD crossovers and upward movements have been followed by substantial price increases. Therefore, this indicator is not just a technical detail, but also a strong reflection of investor psychology and market momentum. Still, relying solely on the MACD for decision-making can be risky. It's important to confirm whether these signals are supported by other technical indicators. If other tools such as RSI, volume, and moving averages also provide positive signals, it would suggest that the rally is on a firmer foundation. In other words, if MACD's current bullish move is accompanied by other supportive data, the likelihood of a strong upward move in the near future becomes even greater. In summary, the current upward momentum in the MACD indicator is technically promising and should be considered a positive signal. If the momentum continues to strengthen, reaching higher price levels becomes not just possible, but a highly probable scenario. Therefore, this technical setup should be monitored carefully, and potential opportunities should be evaluated. We'll wait and see what happens. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.